The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go. And of course, it is the end of fun buying today. Sometimes a little bit of fun buying in the morning. And if you can't get it done when all that IRA cash is floating around freely, just like being one of those guys in the contest where they put you in the phone booth and you just got to grab the money. It's just flying everywhere. But guess what? We're off 7 points on the S&P cash, 2091. And no end to the amount of calls will make that change. Of course, we've got the biggest stock in the NASDAQ doing something that it shouldn't be doing. That's right, folks. We'll talk more about that in a few minutes. But to start the show off, 2.14 billion shares on the New York Consolidated Tape. And we're off 7 points on probably the most important day of the month for fund buying, which means that it's probably going to be tough. Now, I've got a few things that I'm thinking out here. One, if they can't really jack this thing up before the end of the day, and by the way, I expect that there is going to be a little cash on the sidelines that will buy into the close out here, but I'm thinking a couple of points maybe higher than 330. So whatever it is, if we were here at 2090 on the S&P cash at 330, maybe it closes at 2092, something like that. Just too many things going on, and we'll get into it in the show today, but it's not just a little bit bearish, it's hugely bearish when you can't get the market up on a day like this or the last few days with any kind of volume or push. You've got all the free cash in the world, and as they like to call it, other people's money. And another thing they like to say on the street, if you're not buying the top, you're not trying. And I'll tell you what, they're trying very hard to buy this top. And why do I call it a top? This seems the market is very, very heavy. But let's get this party started.
That it's all just a little bit of history repeating.
Today, Congress enacts Alexander Hamilton's plan to fund the public debt, ending years of turmoil and haggling over the junk bonds issued by the federal and state governments during the Revolution, making government spending possible and giving birth the American securities market and the ability to sell our children into slavery ad infinitum, like Greece. And that is the question here. There's always a question of why we can't throw money at a problem today. And of course, the second part of that question should be, why should we give that debt to our children tomorrow? But that's never really answered, is it, or asked? They just kind of ignore it. And they like to...
Are you suggesting we throw money at the problem?
Precisely.
That's exactly what they think. Anyway, we're going to get right on to the show, which is already in progress. Today, Bill Gross and the rest of the folks at PIMCO found out that they got a Wells letter. We're going to talk about this a little bit more before we get into the markets. And a Wells letter is incredibly important. You should know what it means, especially if you're in a company that gets one of these letters. Anyway, the PIMCO Total Return Active ETF, an exchange-traded fund previously managed by star investor Bill Gross, has been under investigation by Securities and Exchange Commission for at least a year for allegedly artificially boosting returns from its trading of certain mortgage bonds. The Wall Street Journal first reported this in September of last year. So it's almost been a year. But what, I guess, if you dig down into it, what they are accusing them of doing is trading bonds between funds inside the same company to artificially inflate profits. That's never been done before, has it? It's illegal in equities. I don't know exactly in the bond market, but the SEC is coming after them. If you haven't got a Wells or seen a Wells letter, it's usually from the SEC. It says that a publicly traded company and or person from the same firm has been investigated, and there is probable legal action planned for violating security laws, and those are federal laws. You go to Club Fed if you graduate to the highest of those violations. Once a company receives the Wells notice, they have the opportunity to contest it. They can make what's called a Wells submission, where the prospective defendant can speak directly to the SEC prior to the start of the regulatory proceedings and make their case as to why they shouldn't be prosecuted. This is almost never done because, of course, attorneys know that all it will be used for is additional ammunition to shoot at the company if it goes any further. This is the equivalent of shut up and take your medicine. No one's going to jail here. Just give us some cash and don't do it again. But what else can you say? The name's well noticed was it started in 1972 because the attorney, who was the committee head of an SEC committee, he was an appointed corporate lawyer, actually came up with the idea and the way it was done. So he got his name stuck on it as a Wells notice. I wonder if he went around going, Mr. Wells, and everybody looked at him like he had cancer or the plague or something. Yeah. Probably not. You can always hope. Of course, Mr. Fleckenstein, Bill Fleckenstein, was out last night on one of the financial infotainment cable channels that will remain nameless, but it has several letters in its name. I think it starts with a C. Anyway, in a social democracy where fiat currency, all roads lead to inflation, he thinks it eventually will, but one of the guys who has cleaned house, and I mean cleaned house in a major way, at least, well, I know of 2 times that he has called a top in the market. Yesterday, he said one more time he was starting his hedge fund to short the living daylights out of the market, and got a little bit of flack about what it was and how it was going to be put together. He was incredibly right in the .com and timing of it. He also made a whale of a lot of money in the top of the housing market going short. I actually have a sound clip of him that we've played before. I'll go look it up. Maybe it's in CNBC, is it? So what? Yeah, it was. He was talking to Jackie DeAngelis. And this is last fall, this spring. I think it was this spring. But anyway, it's kind of an interesting clip.
Right. Well, the problem that I have with what you're saying and what some other people out there have been recommending, too, is that if people had listened to you guys over the last few months, they've really missed out on a big piece of the market gain. So
what? So in the last few months, the market's gone up by a rounding error. So what? How do you
I
think
don't say
people...
so what to taking money off the table.
And, of course, anyway, she is, you can tell she's never actually traded. And that's it. This is not a game of always having to swing. This guy comes along it's kind of like the guy that comes by and hits home runs every October and makes a boatload of money. Mr. October, remember him? That's when baseball used to be good. I don't enjoy it anymore. It just seems to be tiring, like football too, and even NASCAR. I like road races. That's about it now. But it is tough. And yes, Andy, she did try to bait you into an oil call, which he did not make. He was on CNBC with her at 1 o'clock for Options Now. You can go check that out. Andy's got a couple articles, too, on Seeking Alpha again today. So he'll probably talk about those later today with Tom O'Brien and probably in his show at 5 o'clock today. My brother from another mother. But a very good interview with some sharp sharks on the floor in the, what is it, CBOE? Is that where they're at? Or CBOT? I never can remember all those announcements, letters and stuff. So I'll have to take a look at that. Anyway, my point is that this guy comes along and cleans house every once in a while with a big hedge fund on the short side. He said he will be back in business sometime in September, maybe the 1st of October, and thought he was late to the party even then. He was trying to get this thing done, and why they didn't have it in the interview, he did say somewhere else that all the Dodd-Frank stuff has made it it basically took a lot longer than the last two times they set up these hedge funds to clean house. Pretty sharp guy. And if you're going to listen to people that short the market, my particularly favorite shorters are Fleckenstein. On an individual stock basis, Mr. Chanos, and Paul Tudor Jones, if you want to look at another hedge fund where he has a pretty good record of cleaning house on the short side. Of course, we're already starting to make money on the short side in my newsletter. They will probably want to follow me someday. Anyway, the S&P can rise to 3,200 in 2 years, Laszlo Barini said today at lunch. That's a pretty tall order. 1,200 in 2 years, which would be a double. Right, actually 50% move higher in this market. And generally you get these ridiculous calls right at the top of markets. Even if they're going to go higher, they'll pull back and make anybody that is silly enough to shank their fist at the trading gods and tell the market what it's going to do normally feeds them buckwheats. That's a slow, painful beating where they break your ribs. I learned that on the Rockford Files. That was a great show, too. Anyway, a slow, painful beating is no doubt what Laszlo is in for. And I always thought he would make a great James Bond villain with that voice. You only get that voice from getting either hit or smacked in your vocal cords at some time in your life, because it breaks a little bone in there. I think it's the thyroid, not a thyroid boy, thyroid bone, and you get it that way. Pretty nice guy. Ex-Solomon guy, huh? Anyway, pretty sharp. My guess is he's out here probably selling against his call at 3,200. It wouldn't be the first time that they do one thing or say to do one thing and do the total opposite. Andy says they call him Mickey Mouse. We'll be back in a minute. Peak Smartphone. I called it last week. Peak Smartphone. And, of course, I called 115 on Apple. We'll be back with that in a minute. Hi.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Last week on Tom O'Brien's show on Friday night, we talked about Apple going to 115. I said it was going there. I thought it might take a few more days than it did today. And it is a little tough. But it is exactly that today out here. So I will claim a victory lap on Apple.
Well, isn't that special?
Yes, it is. It's very special. And without taking a breath of air, they take the cash out of Apple and run into Netflix. And why did they do that today? Was there a big change in Netflix? No. It was all about keeping this market up. And if they can't do it with Apple, they'll find something else. They are working extremely hard to go ahead and push this market higher. And he says, no chart in the den. I had a chart in the den. And what happened? Something happened here. I don't have... I guess I'm going to have to relog into the den because the little thing that you click on has gone away. I don't know why that happened, but it has. It's gone away. I'm going to have to we're going to have to wait until the break till it comes back. I'm not exactly sure why the little button went away, but it has. Very strange behavior out here. But we will take a look at it. Maybe I clicked on something accidentally, but I don't think I can. Can you turn it off? I don't think you can. Anyway, we'll fix it at the break. Anyway, I claimed peak smartphone, and it was just we had about 6 or 9 months of Samsung already telling everybody that the market at the very high end was flooded. Now, part of that could have been the Apple new iPhone going into last fall. And of course, a lot of people are at the right upgrade cycle. Of course, they're going to be launching the 6S this fall. But a lot of people are already saying that they've had enough. They don't need to upgrade. They're happy with the phones that they have now. And my guess is why they will do okay. The huge growth in Apple probably is over. They've had 3 different failures this last, 6-9 months, starting with Apple Pay, going on to Apple Music, and the Apple Watch. None of those is ever going to generate the kind of almost 70% margins that Apple has in this phone. And the worried people in Apple that are selling it know that those margins are probably going to come down. There's been some rumors that Apple was actually going to get into the business of selling cellular. And I think the thought on this is that if they start getting and going under pressure by companies like T-Mobile for a lower price for their phone, and we start seeing the margins really start to suffer, that they will just try to go around the vendors and the cell providers themselves. That may be a shot across the bow. I don't think that they would actually do it, but I think it's probably a threat. But anyway, that kind of rumor is going around today. What else do we have out here? It's a mad market. And yeah, I don't know why. This is strange, very strange. But we will get it fixed here during the break. Other things of interest out here today, I had a few more things that didn't have time to get to. I had a few questions about Apple in emails, and of course you can email me at path@tfnn.com. But a few questions out here, and if you missed it, Puerto Rico did officially default on its debts. And it's been kind of quiet, I think, because it's been so telegraphed, but it actually did happen. The other thing is a lot of people are wondering about how Apple sells off like it did. Heard Tom O'Brien talking a little bit about what happens when one big street firm decides to start selling Apple. And there's this kind of prisoner's dilemma where as long as both prisoners don't rat on each other, there's not enough evidence to send either one to jail, everything's okay. But if one blinks and starts talking about it, well, maybe he gets 2 years, but the other guy's going to get 10. And that's exactly what happened in Apple today, at least from my opinion, the last few days. That is that someone said, they blinked and said, I'm going to start selling. Then everybody else has to start selling. And of course, the people that sell last do not sell best. They sell at the lows. And I think we're seeing today this movement around 115 on Apple as the end to that prisoner's dilemma. You should look that up if you are not familiar with it. But it's a pretty famous economics game put in the form of a thought experiment. Prisoner's dilemma. 115.34 as we leave this segment. We'll reconnect and be ready to go when you come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's 0 risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Hopefully I can get this up here and running. Why didn't that work? That should work, and it didn't. I'm not exactly sure what's going on here. Ghosts in the machine, folks. Ghosts in the machine. Yeah, didn't want to pop the slide up here. Anyway, I've got it. It doesn't matter as long as I'm here. But what we have is earnings after the bell tonight. Chewy's Holdings. Keep an eye on that. Of course, CMG was a big deal last earnings cycle. And Chewy, CHUY, is the one on this. And well, we'll bring that chart up to CHUY. Everybody thinks this is going to be the same thing. And I don't know if it's going to be or not. Certainly not the kind of juice that CMG has had, but it will be interesting. Home away after the bell also tonight. Take a quick look at this one. This one's just in no man's land out here in a asymmetrical triangle. I don't see a lot in this either up or down other than the volume the last couple of days. Trimble Navigation, a company that is finding it increasingly harder to find a business that is profitable. It's been in a downtrend for a little while. This 22, 28 is somewhere that it doesn't want to close below, or it would have a big problem. Also, another one after the bell tonight is Zendesk. Of course, a outsourced technical support line. This thing is also right down at the lows. And as we've talked about it the last few weeks, why there are a handful of stocks going higher, a lot of stocks are down at these lows, including the energy stocks. And even though they didn't have any volume, they continued lower and blew through the lows. Not a lot of volume, but a lot of these things just continue to melt like ice cream on Georgia asphalt in August, which is hot, by the way, if you've never been in Georgia in August. It's hot. It's really hot. Anyway, other than that, we look forward to tomorrow. More biotech news in the morning. Araya Pharmaceuticals in the morning. This one also very indeterminate as to any direction. Liberty Media, Auto Home, SodaStream. Let's take a quick look at SodaStream. Haven't looked at this for a while. It looks to me like a fad that pretty much has run its course. Be very interesting to see how this moves. Anything below $16.80 continues to be a huge problem. But again, like we said, stocks don't crash at highs. They crash at lows. So you need to watch it. Same thing with markets. They don't tend to crash at the highs. They tend to crash after they've come off of the highs somewhat. SodaStream and Time Warner. Who cares about Time Warner? The spawns of Satan. And I think that's it. What else do we have out here? I want to look at a few other stocks. You, in the same time, can email me at path@tfnn.com. Oh, Andy has his clip here today. Andy was on Futures Now today, if you missed it. And you can find him on CNBC. But we've got the clip here. I can post it in the den for anybody that wants to watch it. Not during my show, of course. I have a question in the den for PYPL. PYPL. PayPal. Of course, I don't know what the question on this is. Hadn't been around by itself very long. It is thought to be the big part of eBay. It's just kind of floating out here. For a long, I mean, I wouldn't want to be long unless this retested $33.98, but you just don't have enough time on this to really make an educated decision. I would much rather trade a stock that had a longer baseline by itself than PayPal out here. I would be willing to avoid any profit in this that may be there for a more probable one in the future. I would much rather have a stock that moved predictably than a whole lot, because a whole lot may be on the wrong side of where I'm going. I'd like to have at least something I could predict, and I don't think there's anything here. To me, there is a handful of stocks that are telling the truth in this market, and we need to know about them now, that truth, in the home builders. In fact, Andy was talking about the home builders and lumber, and I appreciated that insight today. Maybe he'll talk more about that today on the Tom O'Brien Show or in his show at 5 o'clock. But the XHB, get into this $37 mark, and it started to have problems. He had huge volume, and it reversed on February 25th, 8.4 million shares. You had 4.9 million shares on March 31st. We got into it with 4.3 million shares on the 31st of July, and it's back into this trading range here now. Now, by itself, probably not a big deal, and I think we've got some more housing earnings out in the next few days. But this is not it, dear friends. There's a lot more to it. And we will get to that. Hang on a second. I got to do stuff while I'm thinking about it, or it doesn't happen. Hang on a second. Reply. There we go. I got a lot of people emailing me today. So there we go. It's out of the way. It's out of my email box. I don't have to worry about it anymore. Okay, Home Builders Index, but it's not the only one. I almost lost my train of thought, but I hadn't bought a ticket. Okay, so we've got lumber that's headed down fairly significantly, according to Andy, in the commodity space. We also have Home Depot that looks like maybe it's made a high. People have been flogging this thing for a long time. It looks like a pretty nice W pattern up here at the high, 117.99 on March 20th with 12 million shares. What did we get into it? We went above it. We closed below it with 4.3 million shares on the 31st. I would have liked to see it a little bit lighter on this last leg, but certainly it does have volume at the highs. So we'll be taking a look at that. MHK, Mohawk Industries. Of course, this one is so owned by Mr. Buffett, I probably wouldn't short it. You know, it's having a tough time with its high. It went above its previous high on August 3rd, closed back below it, a little sideways out here. Now, he's got enough of the shares out here where he can probably move the price around. But it's still not good to see something where we have an issue, and that issue is I'm starting to see more and more of these charts that look like if housing does not break out in the next day or two, that it looks like it's at best in a trading range and it lower. Of course, the other thing everybody wants to talk about is oil. And of course, if we look at the ETFs out here, again, these markets have continued lower when they probably shouldn't have. March 18th on OIL, the total return crude oil index. March 18th, $9.24, 11 million shares. So 2 days ago, or yeah, 2 days ago is on the 31st, we came down with 4 shares. Yesterday we had 5.4 million shares. Today we're going sideways on light volume. Could we go back up? It certainly looks like, but my guess is that somebody's probably, a lot of hedge funds probably jumped all over and went long crude and energy and are on the wrong side of this, and they're being fed buckwheats again, the slow, painful beating where they break your ribs. And it looks to me like it's going to continue probably over the next few days. My guess is that we have some hedge funds out there that are on the ropes, and they're not going to let these folks out easily. We may even see a few more dollars down, but it really doesn't matter. All they got to do is hold this thing sideways for a few days until these guys scream and have to give up. And at that point, maybe crude does make a low in this market. Now, for confirmation, we want to look at some other ETFs. It's nice to always have a confluence of opinions. The USO, the United States Oil Fund out here, tested the March 18th low that had $15.61 all over it with 54 million shares, went below it, went a good deal below it yesterday on 34 million shares, and just a doji out here today. Now, a lot of times dojis are the halfway move point in the way down, and you can almost make a case that the doji on the 10th of June out here, 10th of July, was the halfway move down, and we may be to a point where at least it goes sideways. But my guess is that this is going to be a lot more like gold and a lot less like a lot of other things that have these instant V bottoms. Wanted to look at Netflix also in FLX. This certainly looks to me like another parabolic move, a series of parabolic moves. I would be watching this for a sign, maybe in the next couple of days, of a top in this. The only reason I say that is that I know a lot of people went short this after earnings last time at 117. They got it back down to 103.88. It's popped back up here. Volume is pretty good here. I just don't suspect that we're going to find a lot of people actually buying this. This is probably more of a short squeeze, and my guess is this thing would probably be moving back down to $100 where it broke out if the market does continue to weaken. And speaking of weakened, we're at 2093.73 on the S&P cash, off 4 points, no big deal. 2.4 billion shares, just not I tell you what was probably more disturbing than being down on a day when all that IRA cash has to be put to work is volume at these kind of levels. Normally, you get a ton of it, and just not seeing it. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, what else can you do? You can post a message in the den, he said. But that's it.
Mr. Mouth is moving, but Mr. Brain doesn't quite know what it's saying.
Yes, it does. Okay, other stocks of interest out here. Let's take a look at it. NOG. Natural gas getting awful close to the seasonal buy points. Northern Oil and Gas. Been looking at this thing because it's down testing its previous low, but again, no real close above the December 16th, 2014 low at $4.79. That had 4.4 million shares. Got into it with 3 million shares, which is not a rousing endorsement. Kind of a little spike up here this morning on 1 million shares. But these continue to have decent energy, especially the last leg. And this last leg that started on July 15th down to the low of yesterday is much more indicative of a market that has a U bottom, if this is a bottom, than a V bottom, which we keep on talking about. Everybody's looking for these perfect V bottoms and getting a U bottom. Yep. We're talking about a U bottom. But we will continue on. I'm just looking through some emails in case anybody else wanted to look at anything else. Trying to think of anything else out here that was very interesting. Hormel. Of course, we've talked a lot about the Chinese buying our companies over here in the United States, and I think it was Smith Foods that they bought this last year. Hormel looks like it's peeking its head above these highs. And when we look at this, we'll find out when the earnings date is on it. This thing always tends to peak above. It's August 19th, so we've got a little bit of time out here. But this one is peaking its head above the previous highs, all at about 59.
You mean spam?
And that is Hormel Foods spam. And just not a lot of volume out here. Again, a lot of these stocks are the ability to sit above these highs without it. No, it wasn't the Firesign Theater. It was Monty Python. Our engineers are sadly confused and dazed. Anyway, anybody else have anything in the den? We got about 30 seconds to go here. I'll try to take it on the other side. Got a few emails to answer during the break. Again, you can email me at path@tfnn.com, and we'll get ready for the end of the show and the start of the Tom O'Brien Show, and then the Andy Heck Show. We got lots and lots of time left in the day here at TFNN. How will we fill it? How will we do it? Well, we got other guests and other hosts. That's how. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Danger, Will Robinson. Danger.
It is dangerous out here because guess what? Mr. Dollar is going to make you holler. It's 97.90 on the dollar index as we speak. And my guess is that we're going to see, as I said last week, probably in the next 7 to 10 days, and I don't know what I actually called it. I'll have to go back and look. We were going to pop up and test that 100, the previous high in this dollar index. My thought is we've built enough cause to go much higher out here. And again, a lot of this movement just about 1 p.m., market's trying to adapt to it, change to it, ignore it. But my guess is there are a ton of stocks that are going to be incredibly sensitive to it. And when we look tomorrow, I think we're going to have a tale of two cities. I'm mixing my metaphors incredibly today. Anyway, the tale of those two cities will be importers and exporters. And which one a stronger dollar works. Netflix, I suspect everybody piled into today as one of those stocks that gets most of its money here from the United States and a safe play. Apple, not so much. The stronger dollar really going to hurt it. So they race out of Apple. They race into Netflix. And my guess, it's all about a stronger dollar. I think it's about a, over time, weaker Europe, and especially the markets that everybody thinks that are going to do nothing but go to the moon, nothing but blue sky over there in Europe, probably a lot weaker than we think. Certainly China is going to have a lot bigger problems. And, oh, I didn't do my Chinese segment. I forgot to do it.
I like Chinese. I like Chinese.
I like Chinese, but I don't like their stock market, and I don't like the fact that they're now putting a holding period on when you can take money out if you are short. One more little lock being closed for anybody that would doubt the preeminence, the inevitability of the Chinese market going higher, and that is they're going to trap people in there. That means that it's hard to depend, because it looked from the article I read that it's different from some of the different markets. But what they're going to do is make sure that your trades do not clear very quickly, that you can't short one day and actually cover the same day, like before or after the close or something like that. But it looks like it's very confused and very tough. And, of course, not a lot of people either trade those markets, but they over there do. But it looks like one more Band-Aid on well, a leg that was amputated. And why they can get these markets up temporarily, I think it continues to be problematic. We are short the third world in the newsletter. And it looked rather depressing here coming in at the beginning of the day. Now looks a lot better out here. And I think any of these third world countries are going to continue to have problems. Brazil, probably the chief of them. But all of them are probably going to have problems with weaker commodities. It's not going to help them a bit. They may ship less. They may ship more. But they won't be making the money that they did at one time. I will find the correct word again soon. In the meantime, watch out for this, because my guess is if you have a move like this, it's probably going to be a multi-day move. I'm not exactly sure what may have caused it, but you got to watch out and get out of the way. I'm pretty sure chart-wise, this looks like it's running to 100. In the meantime, sell when you can, not when you have to. We'll see you tomorrow here. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.